Taxes suck. There's no doubt about it. That's why it's a good thing you got me. Today, we're talking about a piece of advice that's been out in the, in the world recently. Coming from Scott Bessent himself, the Treasury Secretary of the current administration. He had a key piece of advice for you, if you want to put it that way. Essentially, if you want to pay less taxes, just withhold less, right? Well, it's a terrible piece of advice. That's what Taxes Suck is about. We want to call out bad advice. We want to give you good advice. Let's look at why withholding less over the course of the year may not be the best idea for you. Now, if you don't understand taxes, that's really where this is going to hurt you. If you don't have any understanding of why you pay how much you pay, why you might owe some at the end of the year, then this video is for you. You want to understand how this simple picture that we're going to draw up here works so you can know why the advice of Scott Bessent doesn't make any sense for you unless you're in a very particular situation. So what do we need to know about income and taxes, right? Well, at the end of the year, let's just simplify things. You're going to have a pool of income that's going to get taxed at the end of the year. How you arrive at that pool of income can happen in a million different ways. There's so many ways. There's a million different pictures out there of how people get their income that ends up going on their tax return. But at the end of the day, you're going to have a pile of income that's going to show up on your tax return. We'll call it your total income. Eventually it becomes taxable income. But right now, we just need to know that the income is on there. And what's going to happen next, when you get through all the tax crap, all the tax garbage, all the blibbity blue that nobody gets, you're going to arrive at a tax amount. This is the amount you're going to have to pay. And the important thing to understand here is that these two are connected completely. Whatever your income is, it's going to drive your taxes. Seems obvious, right? Well, not exactly. Again, pieces like this piece of advice from Scott Bessent, people's understanding of taxes, they simply may not understand how simple this piece of it is. You are going to have an amount of income that is going to get taxed at certain percentages, and it's going to drive a tax amount. That is going to be the amount of taxes that the IRS or your state expects you to pay at the end of the year. Now, what are most people in a W-2 situation going through? They are getting taxes withheld from their paycheck, paying into those pools across the year. So that's what this withholding is right here. When you're getting your paycheck, you're going to see those federal and state tax withholdings. That money is already being sent off to the government agencies, right? So you are paying taxes across the year. And at the end of the year, we have this little equal sign down here. You're going to have either a tax amount owed, or, we'll put it on the bottom, refundable. The important thing here is that this is completely intertwined with what this amount here is going to be. If you are withholding less taxes over the year, what's going to happen? Especially if you aren't planning for it appropriately, well, a decrease here equals an increase right here. So let's say you withhold $100, $200 less than your paycheck over the course of the year. All that's going to do is turn it into a larger payment at the end of the year. And what does your Taxes Suck guy know the most? Is that people do not know how to plan for taxes on their own. It's a very convoluted thing to do. You lose track of it. It's not something anybody wants to do. So what's going to happen? You're going to be withholding less. You're going to, I got more money in my bank account. I'm doing great. And then you're going to owe $5,000, $6,000, $7,000, 3, 4 more than you did last year. And you're going to be like, what the heck happened? Why do I not have any money? I can't pay my taxes because I spent all that money I had. That's what happens, right? And this is why that piece of advice from Mr. Scott is so poor, because you're giving this piece of advice to people who may not understand or really want their taxes to work that way. You don't want a bigger tax owed at the end of the year. You'd rather spread it out over the course of the year and learn to deal with your cash flow that way. That is ultimately how I would advise it be done. There's plenty of preferences there. You can absolutely pay more or pay less depending on what your personal preferences are. But a wholesale piece of advice to decrease your withholdings is not solid, because you have to fundamentally understand that this is going to go up. For each amount that you don't withhold from your paycheck, that's going into a pool that you're going to have to pay at the end of the year. Now, all these factors are separate. It's important to understand, again, the income leads to the taxes. Your withholdings get subtracted from your taxes to get to that amount owed that you end when you submit your tax return at the end of the year. But these are always at play. These are always working together, and understanding these relationships is going to determine how you personally want to do it. But at the end of the day, you don't want to take bad advice. You don't want to take wholesale bad advice, especially even if it's coming from the Treasury Secretary of the United States. you need to understand a little bit how this works within your picture. Don't just go decreasing your withholdings because some goon told you that that was a good idea. Make sure you understand what that's gonna lead to, the consequences of your actions, so that you can either deal with what's actually gonna happen or make a fundamentally informed choice that's gonna suit you better.